this focus on South Africa. Why now?
Yeah, what we try to do is to catch the results of the major bank, 4 major banks, Absa, FirstRand, Nedbank and Standard Bank, just after results. We probably should have done it a few weeks earlier, but we're there. And really, I don't think there's anything that brings it all together in one go. Concentrate on the average. And I think some of the main points really came out around profitability, the fact that they're well capitalized, and also dealing with some of the impairments. But I'm quite happy to talk about that.
All right, let's break them down systematically. Profitability of South African banks. I mean, in countries like Kenya, we were looking at averages of about 40%. Does South Africa compare?
South Africa is not as profitable. I think the banks are having a rougher time, but the great part of it is that the banks have come back, and the headline earnings per share has now increased by 13% since last year on in total on average. So that is a great position to be in.
I mean, we are seeing some of the leading banks, especially Standard Bank, for instance, looking at restructuring, for instance, looking at other avenues for growth. Their strategy into emerging markets, particularly Russia and Argentina, doesn't seem to have put them in good stead. Does that reflect significantly on their balance sheet?
No, I think firstly the cost-to-income ratio has gone up, so that is certainly part of the of what comes through. But overall, amongst the big 4 banks, all the cost-to-income ratios have gone up. But Standard Banks, and then obviously a bit higher than the others for now. I think in terms of going forward for Standard Bank, I don't think it puts them into a worse position. They are very strong into Africa, and I think going into Africa for most of these banks is quite a big theme.
Managing impairments, obviously post-recession, that's been a big issue. How the customers manage their accounts and how that impacts on the bank. Has the situation improved?
Situation has improved. Firstly, a lot of the banks, in fact, all 4 the banks have showed an improvement in terms of the income statement write-off, a reduced number that's come through. So I think that is good to see. The balance sheet number in terms of overall provisions, that's leveling out and starting to come down. But I think the customer's still in a very difficult position. And then obviously with the National Credit Act, I think a lot of the banks keen to try and resolve their position, and that also some effect.
Obviously the National Credit Act means that banks have had to be a lot more rigorous in terms of monitoring the credit profile of their customers. But going forward, what are the risks? Because we've got inflation rising in the country, and we're starting to see interest rates, well, at the moment they're on hold, but there is a view that by the 4th quarter we're starting to see interest rates rise in this economy as it becomes a global trend, especially in the developed markets and some of the key emerging markets. How would that impact South Africa, do you think?
Yeah. I think there are a few ways and areas that one should look at. The one area is firstly the indebtedness of the customers. That has certainly improved. So from that perspective, it's a good point to be in. I think the banks are also in the position that they are ready to lend. I think the demand at the moment is just lower, and I think lower than banks thought it would be. So we're seeing customers, I think, being more careful. The banks on the other side also saying, look, in terms of loan to value, in terms of something like a home loan where it was at one stage up to 100%, coming down to levels of 80 and so on. So a bit more care taken on that side.
Capital adequacy, I mean, South Africa apparently did really well compared to international banks that were at the center of this global crisis.
Absolutely. We're well placed, overall capital adequacy in excess of 15% for these 4 banks. So I think that is really a very good position to be in. And, we haven't had the fallout we've seen around the globe.
Expansion into Africa, because I think this is the next growth phase. There's the consolidation we're seeing on the African continent, partnerships, rumors abound that FirstRand could be getting into a partnership with Sterling Bank in Nigeria, other such stories, for instance.
Yeah, I think one should say, well, what is there to be done for the 4 banks overall? Some questions have been asked, who's better placed than others? So I think just taking that, yes, I think that is the next area of growth. If you look at the economists' forecast in terms of growth 2011 to 2015, 7 of the countries that's included in there are from Africa, ranging from 7 to just over 8%. So, the growth is there. So you say, well, if they've actually got to go in there. You then say, well, are we better placed than some of the other international banks? We have players like HSBC, Standard Chartered. I think South Africa, for those international players, must be part of the strategy going forward. Right. I think HSBC has been to South Africa and moved on. So I think Standard Chartered would probably be a very good next bank to be involved in South Africa firstly, and obviously they're very well
I mean, obviously
represented in Africa.
that's also another one of those rumors is would we see a Nedbank Standard Chartered, if not a Nedbank HSBC? But what about a South African entity making forays into Africa? We've started seeing that with ABSA, we're definitely seeing that with Standard Bank, and it seems like Nigeria and other oil producers like Angola are hot areas.
Yeah, I think for any South African bank, and if you want to play into the rest of Africa, and sometimes we say, we talk about Africa and South Africa and rest of Africa, but we all Africa. I think an area like Nigeria is crucial, and firstly with the oil and the population. Angola, population-wise, obviously less so, but predictions are that they may well be the number oil producer in Africa.
And very briefly, operating in these markets, I mean, obviously it's a different regulatory environment, a different demographic. What are the sorts of things that South African banks need to be aware of?
Yeah, I think firstly, it's important to know that Basel drives whatever happens in banking around the world. So I think it's just the stage of development in terms of Basel for the particular bank. So got to look for that. But overall, it's also a culture thing, in terms of making sure that the same values are there.